Good morning, everybody. Did the stock market hit the bottom? You know, over the last 3 weeks, the market had crashed. Many of the major indexes like Dow Jones and S&P 500 have lost around close to 30% of their value. This is because of the spreading out this illness about this new virus. And what I would like to point out in this video, did really the stock market hit the bottom? I would like mostly to point your attention over the one of main signals in the technical analysis, mainly about the gaps in price movements. Please pay your attention to these moments right here and right here. So these are the so-called gaps in price movement. What happened here? On Friday, the 6th of March, the Dow Jones Industrial Average have closed about 25,700 and opened at about close to 25,000. This is the so-called gap in price movements. And what happened on the next week? Similar situation. We have a closing of the Dow Jones about close to 22,900 and opening about 21,100. This is again the so-called pro-trend gap. What I mean, when the prices are closing above and the opening is below, we have a down gap. These both are down gaps, and we are in a downtrend over this time. Okay, and what it says, the classical traditional technical analysis, we have to pay attention to two things. What is the direction of the gap, and if the gap is fulfilled backward. In this case, what happened in these two situations? The gap was not fulfilled. Even something more. The gap is used as a resistance level. You see how here the prices are experienced some resistance to break through these gaps upward. And these are the so-called pro-trending gap. In other words, we have a downtrend and the direction of the gaps is downward, and these gaps are not fulfilled back. And what happened on the previous Monday? This happened between the 20th of March and the 23rd of March. We have again downward gap. In other words, the close prices were higher, in close to 19,000, and the opening was at about close to 18,100. But what happened here? What is the difference? Here the prices succeeded to break through the gap, and they continue rising. This is a traditional signal. When the gap is fulfilled, most probably the prices will continue to go in this direction. In other words, in the direction of fulfilling up the gap. And this is also a signal for reversal, and it is also called exhaustion gap. In this way, in this situation, we have a downtrend and we have exhaustion gap. In other words, the expectations of the market participants are already finished, and market participant, this is just one of the interpretations that most of the market participants have said to themselves, okay, the prices are already too low, most probably most of the stock prices are under their intrinsic value, and we may start to buy, because they expect the prices to go back, at least if not to the beginning of this downtrend, at least to a substantial amount of this downtrend to be retraced back. And also pay attention to this this moment. This happened between the 27th of March and the 30th of March. This in here we have, let me just to stress out this moment, we have again downward gap from here to here, but this gap was easily fulfilled up. So I would like to point on these two gaps between here and here. We have two times the market participants prefer to start buying instead of continue to selling. This might be really might be interpreted in this way that already the panic is a bit over, and most of the participants may say, yeah, the prices are already too attractive, and we may start buying, which may result in really recovering again from this short crisis. You know, as I said, most of the major indexes like Dow Jones and S&P, they've lost about just in a matter of a month, they've lost about 30% of their value. And but what could have happened and what we have to look for from now on? Pay attention to this level. This is a very important gap. This gap can be used as a support level for it will be used for many traders as a support level to start again buying, because if this gap, since this gap was fulfilled upward, as I said, from the technical from the point of view of the technical analysis, this is a buy signal, and it may be a signal for reversal of this trend. Just to point out, here we have already this positive divergency, but we should keep also in mind that actually this happens too quickly, and you know, we have to keep in mind also the current situation on the entire economy. You know, over the last couple of weeks, many of the countries worldwide, including USA, they implemented these restrictions for the many enterprises. You know, the entire, for example, this the airlines and restaurants, food chains, and many other enterprises are suffering now. Many of the enterprises are almost closed, and this nobody knows how long this is going to take, how long this will continue. But over the next, let's say, a month, hopefully, if this is over and the economy is getting back to normal, we should. I would like just to stress this this level. This is between 18,200 and 19,000. If the prices do not succeed to break below this level, most probably this is going to be registered in the future as a bottom of the stock market prices. In other words, what do I expect? We have two scenarios. The first scenario is, this is the worst scenario, if the prices succeed to break below this gap level. If this happens, this will mean that this is not the bottom of the stock market crash, and nobody knows how long it's gonna take and how far it's gonna take this down movement. The second scenario is there will be definitely retracement. There will be a retest of these price levels, of these from now on support levels, about 19,000 of Dow Jones Index, and from here we may expect, if if the bears, because of panic or whatever, if they do not succeed to push the prices below these levels, most probably we will have bouncing back, and the market may start to recover and to rise again. Once again, I would like to stress that this is just my opinion. You have to take into the consideration the fundamental indicators, you know, but as I said, this is just my opinion. This is not any investment advice. Please read the risk disclaimer. Okay guys, so if you find this video, if you find a value in this video, please hit the like button, subscribe to my channel, and also I would highly appreciate if you put your comments below to see what is your opinion. Okay guys, stay at home, learn financial markets, and take care. Bye bye.